the cash book. Cash book, just as the name itself suggests, the cash book is used to record cash transactions. The cash book is used to record cash transactions. The other books of original entry, the sales journal, the purchases journal, and the others, they used to record the credit transactions. But when now the transaction involves cash, we are going to record it in the cash book. And in the cash book, as I've said, it is actually a book of original entry, and at the same time, it is a ledger account because it has the debit and the credit side. In that case, we have got actually four categories of cash books. Number one, we have got the single column cash book. The single column cash book. Two, we have got the two, also known as the double column. The double column cash book. Then number three, we have got the three column cash book. And lastly, number four, we have got the petty cash book. Those are the four types of cash books. The four types of cash book. The single column cash book, the two or the double column cash book, and then the three column cash book and the petty cash book. This one, we have already covered it in the ledger. The single column cash book, it is already covered. It is simply the cash and the bank accounts. When we used to open the cash account, the bank account, when we were preparing our ledger accounts, those two accounts, when they are separately maintained as we used to prepare them, they are actually our single column cash book. When the cash account and the bank account are separate from each other, they are not prepared together. They are separate. And actually, if you go to your ledger accounts, look at your cash account that you prepared, look at your bank account. The two of them, when they are separate like that, they are actually your single column cash book. Both of them, the cash and the bank account, they recorded when money was coming in and when money was moving out. When money comes into the business in form of cash, we debit the cash account. When money is coming into the business in form of a check, we debit the bank account. When money is moving out of the business in form of cash, we credit cash account. When money is moving out of the business in form of checks, we credit the bank account. So the cash and the bank account in your ledger accounts, it is simply your single column cash book. They are separate from each other, and that is why they are on a single column cash book. Today, my focus is on the first two. The first, not the first two, but actually the next two. The two column and the three column cash books. How do we prepare them? How do we prepare them? But the bottom line, they only record cash transaction. Anything that is bought or sold on credit at the date of sale or purchase, it cannot be entered in the cash book because there is no cash that is involved. We are not paying or we are not receiving cash at that particular date when the credit transaction is happening. That date, you just omit that transaction. You wait until the date the payment will be made. That is the date now you enter it in your cash book. Let us start with the two column cash book. Two column cash book. The two column cash book. Let me share something here. This is from the previous past papers. Question, the first question, which is for June 2018, question 4A, the candidates were required to prepare two column cash book for Thomas. And the information is as provided there. We are told that the following information was obtained from the books of Thomas for the month of January 2018, whereby the first transaction, Thomas started business with capital in the bank, 10,000 and cash of 20,000. And then we have the other transactions that follow. And then we are supposed to use those transactions to prepare our two column cash book. So let us go on. Just open it from your end so that we can do it together. So it is as simple as this. We have got the following columns. First of all, we have got the debit, which records money received, the receipts. Any money that is coming in, we debit. Then we have got this side, which is the credit, which will record any payments or any payment like that. The payments will go on that end. So here, I'll divide it into two using double lines like that. On this side, I have the following columns: the date, the details, the cash, and the bank. On this other side, I should have the same columns: the date, the details, the cash, and the bank. So when we receive money in cash, we record it in the cash column. When we receive money in form of checks, we record it in the bank column. On the other side, when we pay anything in cash form, we record it here. That's so this column will contain the cash payments. This column will contain anything that we have paid using the check. So, hello? Somebody is on unmute mode. So let us stay muted unless maybe you want to ask any question. So let us start by discussing that question. The first transaction is 1st January, started business with capital in bank, 10,000, and cash, 20,000. So remember, when capital is introduced to the business, from the business side, it is money coming in from the owner. Remember, this is the cash book for the business. So when the business is starting, the business will be receiving money from the owner, who is the entrepreneur. So from the business side, that capital is money in. It is a receipt. It is a receipt. It should be recorded on this side. So you come here and say, 1st of January, that money to start the business is capital. The amount that was in cash form was 20,000. The one that was deposited in the bank, 10,000. So under cash, put the 20,000 that was there, and under bank, put the 10,000 account. That transaction is recorded and it is done. Second, his friend John lent him 5,000 cash. Lend him. So you must always argue from the business. Is the business receiving money or is the business paying? Is it a receipt or is it a payment? His friend John lent him 5,000. Anybody who can try that?
A receipt.
It is a receipt. So we record here the business is receiving money, even if it is in form of lending, it is coming in from John. We record here where it is coming from, and it is 5,000 in cash. So you put that 5,000 under the cash column. On that, paid rent 3,000 by a check. So that is automatically a payment. Money is moving out. So right here, 3rd of January, what we are paying is rent, and the amount is 3,000. By a check, it must be under bank. By a check, it is under bank. On 4th, cash sales worth 1,000 was paid directly to the bank. Remember, when you sell, you receive money. When you sell, it is a receipt in terms of cash. And in this case, we are told it was cash sales, but that money, 100,000, was directly deposited to the bank. That simply means that that cash or that money was never deposited in the cash box, was never deposited in the cash. It was actually the cash sales. Then the moment that money was received, it was transferred direct to the bank. So it is going to be recorded as a receipt in the bank. So you can call it like this. On 4th of January, that money is coming from sales, but was directly deposited to the bank. Put it as a bank receipt like that. Then on 5th, Paris, a debtor, paid him 2,000 via a check. Paris, a debtor. Remember, a debtor is a person with our money, or a person with the business money. So when he's paying, the business will be receiving that money. The business will be receiving that money. That is on 5th of January, where the money is coming from, Paris. And this Paris paid 2,000 via check. So it is a bank receipt. Put it under bank. On 6th, he paid motor vehicle expenses 1,000 by cash. So it is a payment. We paid on 6th of January, paid for motor vehicle expenses. Motor vehicle expenses amounting to how much? Amounting to 1,000, and it was done in cash. Put it as a cash payment of that. Then on 7th, we paid John 4,000. So it is us, or it is the business paying. It is the business paying, so it is a payment. We are paying John. Remember, John is this person here. We had borrowed from him. Now we are paying part of that money that we borrowed. 7th of January, we are paying John, and we are told 4,000. It was done in cash. Put it as a cash payment like that. Somebody is unmute. On 8th.
There was rent on 3rd.
On that, it is here. The rent that was paid on that, it was a payment. It was made by check. That is why it is under the bank. We have already recorded as a payment.
Okay.
Then that was on 8th. This one was, yes, on 7th. Now we are on 8th. He took 2,000 out of cash and paid it into the bank. We took money from cash and deposited that money into the bank. Such kind of a transaction is known as contra entry. Contra entry. It is referred as a contra entry. A contra entry is a transaction that is going to affect the payment and the receipt at the same time. That entry will be recorded on the payment side and on the receipt side simultaneously. And it is actually that transaction where the owner is either transferring money from cash to the bank or from the bank to the cash. When you are taking your money from the cash box to the bank or from the bank to the cash box, such transactions are known as contra entry. That money is not moving out of the business and or it is not coming into the business. It is only changing from one destination to the other, but within the business. So in that case, when it is a contra entry, and I've said we are going to come across it in two ways: the owner taking money to the bank, or withdrawing money from the bank to the cash box for business use or for office use. So in that case, if it is going to be withdrawn from the bank to cash, you know, now on the receipt side, if it is from the bank to cash, it is the cash that is receiving. You put this money on the receipt of cash. And then because it was withdrawn from the bank, we put it in the bank here as a payment because it is moving out of the bank. So from the bank point of view, it is money out, or it's like a payment. We put it here, then we receive it here. But if it is going to be money deposited from cash box into the bank. If it is cash to bank, it is bank that will be receiving that money. So on the receipt, put it on the bank. And then because it is cash being transferred to the bank, on the cash side of the payment side, put it as a payment. Let us look at what happened in this case. In this case, he took 2,000 out of cash and paid it into the bank. So it is the bank that is receiving that money, 2,000. You put it there and you write here where it is coming from. It is coming from cash. And you put into bracket C to mean the contra entry. The date is on 8/1. The same date, 8/1, you record it on the other side. It was cash taken to bank. So cash is reducing by 2,000, and that money is going to go to the bank. So you put that back. That is how we record a contra entry when it is deposited to the bank from cash. It is received by the bank. It is paid from cash. That is what we mean by that. We shall come across more on that, and you will understand better. On 9, bought furniture worth 1,000 and paid by check. When you buy, you pay. So it is a payment. When you purchase, you pay. So it is a payment. 9/1, you write here what you bought, furniture. You bought furniture, 1,000 by check. Put it under the bank. Then on 15, paid business insurance premium of 1,000 via cash. So come here on 15/1, what we pay is insurance. Right there, insurance, and we are told it was 1,000 via cash. So you put it there, it's 1,000. 1,000 via cash. Then on 20th, we withdrew 2,000 cash from the bank for business use. For business use, it is now to cash box. Anytime you will be told for business use or for office use, just know that money is being withdrawn from the bank and then brought into the cash box. And in this case, it is another contra entry. It is another contra entry. And this money now, it is from the bank to cash. So it is being received in the cash. So you will come here and you say, on 20th/1, there is money that is going to be received here, 2,000 cash, and you write here where it is coming from the bank. Put it in cash. Here we normally write where it is coming from the bank. Then you go to the other side, 20th of January. What happened? Now it is the bank that is paying the cash. So you put 2,000 as a payment in the bank. Then you write here where it is heading to cash. That is all. That is all. That. So not how we do it. Where the money, where it is being withdrawn from, you put the figure there. And here you write where it is going. Here it is where it is going. It is going to cash. The cash, that money is received under the cash. And then here you write where it is coming from. Where it is coming from. Lastly, paid wages. What we are paying is wages of how much? Cash, 4,000. And that is the end of the entries. Then you will be required to do the balancing. The balancing is very simple. You balance the cash separately, the bank separately. How do you do it? On the cash column on the receipt side, all this cash that we have here, it is the total amount of cash that the business received in that month. The total cash that we received the business that month. 20,000 plus 5,000 plus 2,000, that is 27. The total cash received that month. Then on the cash of the payment side, all the cash that we have here, it is the cash that we paid, what we paid in cash form. So here we have got 1 plus 4 is 5, 7, 8, 12,000. So we paid a total of 12,000. And here we received 27,000. So it is a very simple arithmetic. If we received 27,000, we paid 12,000, then there is a balance in the cash box. And the balance is 27,000 minus 12,000, which is 15,000. So you come here and say, on that last day of January that year, there is a balance added down, closing balance in cash of 15,000. So that now we can have 27,000 here, and on this side, we shall also have 27,000. Our cash is balanced. We do the same to the bank. The bank, if you add this is 10 plus 1, 11, 11 plus 2, 13, 14,000. The total cash that we received is 14,000, but we spend this plus this, that is 6. 14,000 is what we received. We have spent 6,000. The difference is the balance that we have in our bank account.
15,000 volume.
This is
15.
no, this is 15,000, and then we have spent 6,000. So there is a balance of 9,000, and along with that, just right there 9,000. So that now this side can have 15,000, and this side can also have 15,000. That is the end. So when we start the next month, which will be on February, 1st of February, we shall have now the opening balance. The opening balance is balance goes down. In cash, what we close to it in January, which is 15,000 cash, will be the opening balance for January, for February rather, and here we shall have the 9,000. That is the end of your cash book. That is the end of your cash book. That is the end of your cash book. So it is as simple as that. Receipt versus payments. And it is simple. Record the cash receipt, the bank, the cash receipt versus the cash payment. The bank receipt, the bank payment. And you are done. Any question for the 2-column cash book? Any clarification? Maybe there's a transaction that somehow confused you.
Can I ask?
Yes, somebody else?
Yes, I just wanted to ask you to kindly just go over the contra entry part.
The contra entry part, I've said first, the contra entry, it is like taking money from your left hand to your right hand. That money has not moved into the business, has not moved out of the business. It is the money that you had, but only that, maybe it was in cash, you are taking to your bank. Just a minute, Margaret, I'm coming to you. It was in cash, you have taken it to the bank, or it was in your bank account, now you have withdrawn it to your cash box. So it is not money that is moving out or moving in. It is not changing the business cash position. Now, in terms of recording, if it is withdrawn from the bank to cash, you know now it is going to be received in cash. So on the receipt side of cash, like in this transaction that occurred on 20, we received 2,000 from, or we withdrew 2,000 from the bank to cash. So cash is the one that is receiving. Put it there, put the amount on that column. And here you write where it is coming from. Where is it coming from? It is coming from the bank. It is coming from the bank. And on that same 20 here, the bank is reducing. The bank is reducing as a result of that withdrawal of money to be taken to cash. So because it is reducing, we consider that reduction as a payment. It is reducing, it is a payment in the bank. So you put that one or that amount on the payment of the bank because that is the account that is reducing. And here you write where the going to. And actually here, all that we have here under the detailed column it is actually where the money is going or what we are paying. What we are paying. So it is going to cash. If you look at the other one, which is on 8, it is actually we took money from cash to bank. We took money from cash bank here. So if you are taking cash to bank on the receipt, you receive it in the bank. You receive it in the bank. This 2,000, sorry, you receive it in the bank. And here you write where it is coming from cash to bank. And then the same page here, you can be able to see it is a payment in the cash because it is the cash that is reducing. Then we write here where it is what we are paying or where it is heading to. It's heading to bank. I hope it is clear.
Yes, thank you.
Yes, Margaret.
Mwalimu, explain to me why the balance brought down is 15,000 and 9,000. Well, when we did the calculations, it's 27,000 for cash and bank 15,000, please.
Okay. You know, the 27 and 15, it is what we received. This is the total receipts. But what we received was used to pay. This is what we received. Yes, we received the 27,000, Margaret, for cash, but that 27,000 has been used to pay all these cash payments. All of this has been paid from that cash of 27. So yes, we received 27, but that 27 has been used to pay expenses or costs worth 12,000. Therefore, what you shall have as the balance in your pocket, it is simply 27 what you received minus what you have paid. That is why it is 15,000, which is the balance carried down. When we go to your cash box, with your cash box on 30th of January, what we are going to find there in terms of amount, 15,000, not 27,000. 27,000 is your total receipt, but that 27,000 has been used to pay costs worth 12,000. So what we shall find in your cash box is 15,000. And don't forget that when it is the last day of the month, the next day is the beginning of a new month. So if I come to your cash box on the last day of January and I find that for 15,000, then the following day, it is going to be 1st of February. Yeah? The same amount that was there the previous night is the same amount you will find it early morning of the next day, which is the beginning of the new month. So the balance is simply the difference between what you received and what you have spent. So you cannot expect what you received because it has been spent. You only come or you record the balance. You record the balance. Margaret, is it okay?
Yes, it's okay, Mwalimu, asante.
Yes. Okay, that is somebody else has an issue. Anybody? Ramadan?
Yes, my question is, Mualim, is it possible to have the balance carried down on the different position? Like on cash, we have the balance carried down on the credit, and on the bank, balance carried down on the debit side.
Yes, for the bank it is possible. Ramadan is asking whether it is possible to have the balance carried down, maybe they are on this side. When the balance carried down is on this side, it simply means that the payments were more than the receipts. For the bank, it is possible because we can have what we call the bank overdraft. For the bank, it is possible, the payments can exceed the receipt. But for cash, it can never be. For cash, it can never be. The worst that can happen in the cash is when they agree. The payments and the receipts are the same. So the worst that can happen is when you have got a zero balance because the total receipts are equal to the total payments. That is the worst that can happen. But for bank, it is possible to have a negative bank balance because that is what we call an overdraft. So in some instances, these payments for the bank can exceed the receipts that we have done here. And you find that the balance carried down now here. That is possible, Ramadan, for bank, but for cash, it will never happen.
Okay,
Yes, yes.
asante.
Welcome. So, okay, somebody does not have the question on WhatsApp. Who can share? Who can send that question on WhatsApp? Somebody to send it. Or I can do it. Somebody is having a birthday today. Hey, we wish you a very blessed birthday. A very blessed birthday. And then Nancy, you can share the link to the WhatsApp. There's somebody who is requesting it here. You can share that link here so that she can join. Hi. The column Cashbook is where we are sharing next. The 3-column Cashbook. For the 3-column Cashbook, we are going to introduce a column for amounts on each side. The receipt side, we are going to have an additional 1 column. The payment side, we are going to have an additional 1 column. And this one is to record the cash discount. We are going to incorporate cash discount. Cash discount. Cash discounts. A cash discount is a discount the business is going to allow the customer or the suppliers are going to give us, or we are going to receive it from our suppliers because of prompt payment, paid within the scheduled time. So to encourage prompt payment, traders normally give their customers cash discounts. Where you are told, if you pay within 2 days, I'm going to give you a discount of 5%. So you will actually make sure that you pay within those 2 days so that you can enjoy the discount. You are told if you pay within a week, I'm going to give you a discount of 10%. You will actually make sure that you are paid within that 1 week so that you can enjoy the discount. So in the process of giving the discount, the business is going to make sure that it collects as much amount from the debtors as possible to avoid the issues of bad debts. So the cash discounts are of 2, whereby we have got the discount received and we have got the discount allowed. These 2 are normally regarded as the cash discount. Discount allowed, it is what the business is allowing the customer, what we are allowing our customer. And remember, the discount allowed is normally considered as an expense because it is actually going to reduce our revenue. So the discount allowed, it is what we are allowing, what the business is allowing the customer. The discount received is what the business is receiving from the suppliers. So if we pay our suppliers promptly, they will give us a discount. So to the business is the discount received. If the customers are allowed the discount, it simply means that if they pay promptly, we give them a discount, the discount allowed. So one of these is going to be on the debit side, which is the receipt side. One of it is going to be on the payment side. The question maybe I will ask, which one between these 2 it is going to appear on the receipt side? Discount allowed or discount received?
The discount received on the discount received on the debit side.
Discount received on the debit side and discount allowed on the payment side. No, it is the opposite. I know people normally confuse the two. Because it is received, they tend to think that it is going to be a receipt. No. The reason being is this. Remember, we are receiving this discount when we are paying. There is a supplier that we are paying, and that supplier is the one who is giving us discount, or we are receiving that discount from him. So the discount received comes as a result of paying. When we are paying is when we receive, so it is on the payment side. The discount allowed, it is going to be coming, actually it is going to happen when we are receiving money from the debtors. You know, the debtors are supposed to pay. So when they pay the business will be receiving money from them. So as we receive money from the debtor A, we also allow the discount to that debtor if actually the debtor qualifies to be allowed the discount. So the discount received is on the payment side because we receive the discount when we are paying. And then the discount allowed is going to be on the receipt side because we are going to allow the customers when they are paying us or when we are receiving money from them. So in short, the format for the 3-column cash book is going to be to adjust my camera a bit. The format is going to be as follows. Here we shall have the date, the details. Here we shall start with the discount allowed. Then we shall have the cash, the back. On the other side, we are going to have the date, the details. Here now we are going to have to start with the discount. Somebody to mute. Cash and then let me balance my camera.
Mwalimu,
Yes.
kindly just give the definitions again. I think when you went into details, I got lost.
Which one?
This between the two.
The
The discount received, the discount allowed.
The discount is actually an allowance. Discount, let's start with the discount allowed. It's an allowance given by the business to the customers. An allowance given by the business to the customers. Given by the business to the customers. To encourage prompt payment. Given by the business to the customers to encourage prompt payment. Prompt payment of the account. Prompt payment of the account. The other one, discount received, it is an allowance received by the business from the suppliers. An allowance received by the business from the suppliers. An allowance received by the business from the suppliers. To encourage the business to pay its accounts. To encourage the business to pay its accounts. To pay its account promptly. Pay its accounts promptly. So that is it. So I want us to go to question that occurred on December 2019. December 2019, 6A. December 2019, 6A. So the link has been shared there. Anybody who is not in the WhatsApp group, you can join the WhatsApp group through the link. So the question for December 2019, it says that the following financial transactions took place at Bosira Shoe Dealers shop during the month of October 2017. So this was not a new business. This is a continuing business. So we are given the opening balances, cash, that's 2,400 debit. So you come here and record 1st of October. That amount is what we call balance down, the opening balance. For cash, we are told it is 32,400. That's 2,400. And then for the bank, and you are told it is debit. Remember the debit will be here. Debit is this side where we have the receipts.
Sorry, Mwalimu, which question is that?
The second question.
Okay, thank you.
So the 1st of October, opening balances brought down. That 2,400, sorry, I've put it on the wrong column. It's supposed to be here. Cash, that's 2,400 under cash. Under cash, not under the discount. That's 2,400 cash. And then for the bank, we are told it is 19,800 credit. Credit is on this side. So you just come and write the same date, 1st of October. The details is the opening balance. Then you put it in the bank, 19,800. This is now what we were saying. This was an overdraft. It simply means that the previous month, which was September, we had an overdraft. That's why the opening balance is a negative. When it is here, it is a negative bank balance. So when we are starting the month of October, we are starting with our bank having a negative balance. And this negative balance was from the previous month. Then what happened in that month? Second, borrowed 72,200 cash from Wafula. When you borrow to the business, it is a receipt. Money will be coming in. 2nd of October from Wafula. And this money came in as cash, 72,200. So you put it under cash like that. Then on 4th, bought stock at 19,900 on credit. When you buy anything on credit, that date of buying, you should not record anything in the cash book. Don't record it in the cash book because there was no cash receipt, there was no cash payment. And that is what the cash book is meant to record. Cash in, cash out. So you just skip that transaction. We shall actually factor it when the payments will be made. On 5th, deposited that once, sorry, I think I've skipped. I think, yes, I'm in order. Deposited that 1,650 cash in the bank. That is a contra entry. Where was it received? Deposited into the bank. So the bank will be receiving that money. The receipt, receive it in the bank. That 1,650. Right here where it's coming from, cash. Then you go and make it as a payment on the other side, 5th of October. There is a payment because we are taking it from cash, so it is cash that is reducing that 1,650 and it is going to the bank. On 7th, returned stock worth 4350 to Asha. We returned some goods to Asha. The only question you need to ask yourself, when that transaction took place, do we have money out or money in?
Mwalimu,
Yes,
This contra entry.
yes.
The last time you showed me that this C that you're putting aside here, it's supposed to be between the bank, between the debit and credit, the two double lines here. I thought the C was supposed to be there to indicate that this side and this side, it's a contra entry instead of.
Yeah, what is that? Yeah, you know when you here cash, huh? Well, you want to be here?
That is what you taught me before.
No, no. I've never taught you. I think maybe somebody else. That's one I deny. I deny that. No, no, no. That put it then when you write it bank, if it is going to be appearing on the other side, the examiner will just when you put a C here, there is a date. Atakuja tu ili pande ingine aone kama kuna the same date. Whether there is that. Don't put it here. Back up. It is going to serve the purpose very well. Eh?
Okay.
Yes, yes. So the only thing that confuses people is what to write here. If it is under cash here, obviously here it is going to be bank. So you cannot put the figure here under the cash column and here you write cash. No. So if it is a payment in the cash, here you write where it is going. So it cannot be a payment in cash and it is going to cash. No. It is a payment in cash, then automatically it is going to go to the other account, which is bank. And here, if it is received in the bank, then it must be coming from cash. First, note that, note that. That is what. So we are in this transaction on 7, returned stock 4350. So the only question, anytime you enter a transaction in the cash book, you need to ask yourself, does that transaction translate to money in or money out? When we return goods to a particular supplier, did we receive or pay money or we didn't? A suggestion?
You didn't.
Yes, there is no cash in, there is no cash out. And if you don't have cash in and no cash out, leave that transaction. It was just a distractor, but it can be of importance somewhere. But here it cannot come here because we did not receive anything, not pay anything. Leave it. Then we go to on Eve, paid telephone by check. So that one is the payment. On 8th of 10, you write here what you paid. Telephone. How much? 8,300 by check. So you put it there. On 9, made credit purchases worth 2,800 from Abdi. Again, anything on credit, leave it. On the date of purchase, don't consider it because there was no cash in, no cash out. Received a check that 6,900 as rent income. So that is money in, rent income, come here and record it as what? 10, 10, 10. Right here it is rent income. Rent income, 36,900 by check. So receive it in the bank. 36,900 the bank. Then on the next date, 14, credit sales at 24,300. To Secundo, credit sales, anything on credit, leave it, leave it. Now we go to 17. Paid by cash, the full amount due to Asha. Paid by cash, the full amount due to Asha. Somebody is saying credit transactions are meant to confuse you. Anyway, they are meant to confuse you, but in most cases, you will find that when there is a credit transaction, on that date when the credit transaction took place, you don't record it. But it will come a time when maybe money will be received or paid. Like in this transaction that we are now handling, 17th. Paid by cash the full amount due to Asha. You know, now you must go back and find out how did we relate with Asha. The first thing you do is to consider transactions that occurred on 4th of October, where we did what? Bought stock 19,900 on credit from Asha. So that is where we started. That was put it down 19,900. That was the total amount we bought. And then don't forget to include the transaction on 7th. Returned stock was 43.50 to Asha. So when we return, we reduce this. This is what we were to pay, but the moment we return goods was 43.50, yeah? Less, minus that, because we are not going to pay for them. So how much do we owe Asha? If we bought goods worth 19,900, then at a certain date we returned goods worth 43.50. How much do we owe Asha?
15,550.
15,550. This is what we owe Asha, and this is now what we are told to pay in transaction dated 17th, whereby we are told paid by cash the full amount due to Asha. So the full amount that is due to Asha, it is not this, it is this. We must consider the 43.50 that was returned. So you pay Asha, you come here and record it as a payment on 17th, and you say here, we are paying Asha. This amount is being paid by what? By cash. 15,550. Somebody is saying can't see the board clearly. I don't know what is the challenge. Mine, I can see it is very clear from my end here. If I can look at the screen. Anybody who is having a challenge on seeing what is written on the board? Somebody is saying it's very clear also. I can actually tell it's not clear. I don't know. I don't know why one of us is not able to see the board clearly. And if I close, I switch off. Is it becoming better? I have switched off my lights. I hope now it is more clear so that I can reduce the amount of reflection on the board. Okay. We can move on. Let us consider the next transaction, which is on 27th, which says that received in cash form, the amount due from Ole Secundo less 2% discount. The amount. Okay, somebody is asking about the repetition of this. When you are told to pay the full amount to somebody, you must go back to the transactions where the person was involved. So for Asha, the first transaction occurred on 4th, whereby we bought goods worth 19,900. Then we connect with the transaction again that occurred between the business and Asha, which was on 7th, whereby we are told we returned goods worth 43.50. You know, you cannot pay for goods that we have returned. So if we bought goods of 19,900 initially, and this, then this is the amount that is due. This is the amount that we are supposed to pay. You take the amount or the value of goods we bought, you subtract what we returned. This is now what we are supposed to pay. And that is now what is being told, or what we are being told to pay in full. Pay in full. So we pay what is due to that particular supplier, Asha, and what is due is 15,550, not 19,900. We must deduct the value of goods that were returned. Hope it is clear that way. Now we go to 27th. Okay, we go to 27th. Received in cash in cash form, the amount due from ore secundo less 2% discount. So ore secundo, you must go back. There must be a date we bought goods on credit from the person, and that is on 14th. On 14th, whereby we sold goods to ore secundo worth 24,300. So you come here and say what we were supposed to receive is 24,300, but here we have been told we less 2% discount. So you come here and do 2% of 24,300. That translates to how much? Somebody?
486.
48,6.
40?
486.
486. That is now the discount. This is the discount. So how much ore secundo will pay? So ore secundo will pay 24,300 minus 486. So how much are we going to receive from there?
23,814.
23,814. Then now we record it. So we are going to receive, remember we have received that it is a receipt. So come here and record the date, 27. Where the money is coming from is from ore secundo. The discount allowed is what we deducted for 86. And then here we are receiving in cash the balance, which is 23,814. You put it like that. The discount allowed is this. This is the amount that we shall receive in cash. Then on 29th, paid by check, the amount due to Abdi, that's 4% cash. So you just go back to where we bought goods from Abdi on credit. On 9th, paid credit purchases worth 20,800 from Abdi. On that date, we did not record it because there was no payment. But now we are paying on 29th. So what you will do, go to that amount that was due to Abdi, which is 20,800. So you come here, we want to pay 20,800, but we are told we shall enjoy a discount of 4%. So can you do 4% of that amount?
$832.
832. So it is actually a payment paid by check. So you will come here and record on 29th of 10, we are paying Abdi. So there is a discount that we have received of 832. Then if we were to pay 2,800, we have enjoyed this discount. So how much are we going to pay? How much are we going to pay by check?
19,968.
19,968. Just check, so you put it in the bank column. Lastly, on that part, whereby we are told deposited all the cash available in the business into the bank account except 25,000. We deposited all the cash available into the bank except 25,000. Here, we don't know how much we have or how much is available first. And therefore, we cannot be able to know how much will be deposited, but we can calculate that. We can calculate how much cash is available first. That is the starting point. To get the cash that is available, you take the total cash received. Somebody to mute. You take the total cash that was received. You add this, this, and this. Can somebody do the addition? That's 2,400, 72,200, 23,814. How much cash did we receive in that period?
128,414.
128,414.
Yes.
Then on the other side, we have got the cash that was spent, the cash paid. Remember, from this cash that we received is what we have been using to pay for this. So can you give me the total cash payment?
$19,200.
Sorry?
No, it's 47,200.
47,200. You are adding these two figures, the cash payment. 47,200. So a simple calculation needs to be done here. And I hope you are going to agree with me that if we have received 128,414 and we have spent 47,200, then how much is available? How much is available? If this is what we receive, but out of this amount, we have spent this. How much is available? It is the difference between the two figures.
81 to 14.
81,214. This is available. Now, if you read the statement, it says that deposited the cash available in the business into the bank account except 25,000. So, in simple terms, they are telling us if we have got 81,214 that is available, we take the rest of the amount, but we retain 25,000. So, if this is available and we want to retain 25,000, so how much are we going to bank? It is actually now going to be what will go to the bank will be what is available, 81,214 minus what we are going to retain back, 25,000. So how much are we going to take to the bank?
56 to 14.
214.
56 to 14.
This is the bank. Look at the procedure that we have.
You have lost.
Yes, that's why I want to go back. We added the total cash that we received. Apart half the total cash received was 128,414. To add the total cash that was paid, apart 47,200. So the difference between what was received and what was paid, this figure, it is what was available. That is what was available at that point. But we did not take to the bank everything. We were told only to bank 25,000. We were told only, sorry, not to bank 25,000, but to bank and only retain 25,000. Now the question is, if we received this, we have paid this, then this is what is available. If this is what is available, we are told to be paid because it's saying except 25,000. So 25,000 is not going to be banked. But remember, we have got 81,214. If we have got 81,214 that is available in the cash box, how much are we going to take to the bank so that we are left with only 25,000? So it is going to be this minus what we are leaving behind. What we are going to bank is what? 56,214. 56,214 is what will go to the bank. And what we have received, subtract what you have paid, you will get what is available at that time. But because you are not banking everything, you subtract what is going to be retained from what is available. Then the rest of the amount, which is this, should be deposited in the bank. And actually, it is going to be a contra entry because cash is paying and the bank is receiving. Understood?
Very clear.
Yes. Now you come here and do a contra entry. Here, the bank will be receiving that money, 56,214, and that money will be coming from cash. Cash will be paying the bank, which is the bank. Cash will be the payment in the bank, 56,214. That money is going to the bank. The date was 31st of October. 31st of October. Then that is sorted out. Now the remaining bit is for balancing. Balancing is very simple. You do as we did the previous one. But for the discounts, we don't balance them. For the discounts, don't balance them. Don't balance the discounts. So right here, 486. Just right here, 832. They are not supposed to be equal. Discount allowed and the discount received, they are different accounts. So they should not be balanced. So, but for cash and bank here, you need now to come and record the balance carried down, if there is any. For cash, the balance there will be 5,000. What was retained, the balance there. If you do the calculation, it's going to give you the same amount. If you add the total cash here, you minus the total cash payment, I know it is going to give you this figure. We have done it correctly because that is what we have retained there. So that is the balance. For the bank, take the total receipt and you add the total receipt here.
Mwalimu, would you kindly repeat there on where we are placing the 25,000? I think I got lost.
Okay, the 25,000 is actually from the statement. Remember, it is saying, we paid all the cash that was available in the business except 25,000. Remember, we had 81,214 that was available. That is after taking the total receipt and we subtracted the total payments. We actually had this amount available. But we were told we did not bank everything. We did not bank everything that is available. We subtracted 25,000. 25,000 is what we have now. Because if that is what we retained, then that is the balance that we have. Alternatively, you can actually let us calculate it so that you can see whether we are going to find it. So that it doesn't confuse you. Can you add the total cash receipt here? That's 2,400, 72,200. That's 2,400, that's 72,200, and that 23,814. It is going to give you this figure. We got it 128,414. Can you now subtract this 3? That 1,650, 15,550, and 56,214. What do you get? This one, I'm interested with this one because this one is not the cash payment. Somebody adding while I check my calculator. This one you must be with your calculator there. You cannot survive in accounting without it. So that 1,650 plus 15,550 plus 56,214. It gives you 103. I'm getting 103,414. 103,414. The total cash payments here, 103,414. If I subtract this, I subtract this figure from this, 128,414 minus answer, I get 25,000. I should get 25,000. And actually that was what was left there. That is what we left there. So it should be the balance. It should be the balance. Then for the bank, take the total bank receipts. That 1,650 plus 36,900 plus 56,214. It gives me, let me write it aside so that I can find out whether it is another overdraft. The cash, the bank receipt is 124,764. The bank receipt. What about the bank payment on this column? 19,800 plus 8,300 plus 19,968. It gives me 48,068. This is the receipt, this is the payment. So the difference is the balance. So this figure is higher, 124,764. So the balance later on that way. This minus this is the payment, sorry. 124,764 minus 48,068. Inakuja 76. 696. $124,764, and this one was 128. 128,414. So they should be the same. That is the end of that question. That is the end of that question. That is the end of that question. How we treat those entities. So we need to have one more on this. We shall have one more question on the 3-column cash book. Then we can do maybe 2 questions on the petty cash book. That will be the end of the cash book. That will be the end of the cash book. Then we shall meet and discuss about the bank reconciliation statement. So if we can have that class on Sunday, we do this under the petty cash book. But the member cash book, we focus on the reconciliation next week early morning. Then we move to the control accounts. And in case you have any question, in the course of the week,